And there's there's so many things that I see where people don't understand to do the due diligence the right way that they end up buying something that they really don't know what it is. And that's the wrong way to go about this business, obviously. It's the wrong way to go about any investment. You just simply can't do that. And sometimes in investing, it's all about the fine points, and that separates the amateurs who are eventually going to get burned from the professionals who go on and continue to make money. It's dotting the I's and crossing the T's. And we saw that yesterday, Dwayne, as we started to peel back the onion, as I like to say.
Yeah, absolutely. I mean, I was really surprised of what is being recorded and what is saying that the actual deal is. And then when you peel back the onion and go through all the numbers, all the investigation of, hey, is this correct? This doesn't line up. The allonge isn't there. It was bought here, prices recorded different, what all that. And so people that are uneducated really at the end of the day would think, okay, those numbers, we're just going to take it for face value of what it is and not really check out. And if so, we saw yesterday by if somebody would just didn't have any experience and just took it for face value and bought that deal, they would have been magically surprised at the end of, instead of receiving 200 some payments, they're going to get 400 some payments. So big surprise. And at the end of the day, you would have really felt, man, I got a bad taste for notes. And well, you shouldn't have a bad taste for it. It's just you just need some education and understanding of how to look at a deal properly.
Yeah, and I don't put blame always on the note seller because
Right, right,
sometimes the note sellers simply don't have enough information and they
right.
do the best that they can. Are there some bad players in the industry? Unfortunately, there's a couple, and I think you find that in any industry that might withhold information that would hurt the perceived value of their note. But in the case of yesterday, I don't think that's the case at all. We simply
No,
somebody had to fill out information, put it out there the right way. I would have done it differently if I was marketing that particular note and explained it a little bit differently. And that's something else I teach people to do. So I'm going to do a truncated version of what we saw yesterday. Just going to give you kind of a taste of it in the time that we have here together, because the full content of this, of course, I will do for my student clients tonight and show them all the details and all that. But you got to be a member for that sort of thing. So I'm going to give you guys a taste of all of that in the time that we have together. And if you want to become a member, have questions about how to become a member and work with you directly, contact Dwayne and let's talk about it. There's this Calendly link right there on your screen, and just copy that down. It's just calendly.com slash Dwayne Gibbs NMS. And you can set up a call with him and let's talk. You want to become a member and join our team here because we're closing transactions really every single week. And there's no reason why you can't do that. In fact, also yesterday, Dwayne was able to join us where I was talking with a fairly new student of ours that I think he's been maybe a month and a half, and he's buying his first two notes, right?
no.
All at the same time there. So, and this was a person, maybe like many of you that are listening and watching this, that knew nothing about notes at all. You don't have to. We can accelerate you very quickly into this because, again, there is approach to doing this due diligence, so you know exactly what it is that you are buying. Okay, so let me give you a hint about here what I'm talking about. This was the listing that we saw, and by the way, this was just an exercise that we do on a regular basis, looking at deals, looking at inventory. So this wasn't hand selected and oh, this will be the perfect thing. This was probably the third or fourth one that we kind of skimmed through, and this one made a lot of sense, but also we had some questions on it. So this is what the listing looks like. And as soon as my trained eyes looked at this, something didn't seem right. When you look at, for example, this was okay, make an offer on that. But to make an offer, what didn't look right to me was this. How could a loan created in February 28th, 2005 with a balance of 54,000, because that's what it says, origination date of $54,600, how could that in 2024, soon going into 2025 here, how could that possibly have a balance of $51,881?
Hmm.
It can't. That's mathematically impossible. How could there be 298 months left on a loan that was created back in 2005?
That's one of those dollar day deals, I guess he got.
What's that?
I said, I guess that was $1 a day
Hmm.
uh, type
Yeah,
deal.
monthly payment sort of thing. Yeah, so it's just things like that that you look at that and you go, well, that's not right. So that's why a lot of times when I'm looking at these deals, I'll go back and check their math. So if I check their math pretty quickly on this one with a financial calculator by taking the 54,600, that's what they said the original loan was, at 4.68%, right? I'm just following along what they have here. The payment's 294.73. That comes out to 329 months on an amortization schedule. Now, that's not normal. Most of the time you see an amortization schedule, it's going to be 360, 240, 180, 90, 60, those sorts of things. It's not 329.33 months. So for me, on top of course, the date, that told me that this loan has gone through a modification. Okay. Now, somebody who's new in the business may not have picked up on that, and they just looked at the note in its current state and just said, okay, well, the loan, let's see, I had another slide here, so I'm trying to just go through the highlights here. So if you calculated what the loan is currently, because they did say the balance is 51,881 at 4.68%, 294, that does leave 298 payments. So that part is accurate. The loan as it is now is accurate. I'm just saying that that's not the original loan. So what's the story? Did the loan go bad? Did it get into non-performing? When was it modified? What does the modification say? Because everything that precedes that modification is now thrown out the window. But we have to scrutinize that loan modification to see what the terms are. Is there other debt on there that's been added to the back of the loan? Is that forgivable debt, non-forgivable debt? There's a lot of questions that are in doubt here because the numbers simply don't add up. The current loan does, and somebody who's new and doesn't understand this would just blindly buy this current loan. And that could be a mistake because this may not represent what the actual modification has done. This might still be reflecting some of the old, some of the new. We've got to get it down right. And so my initial suspicions were 100% spot on because as Dwayne and I started to go through and look at this note, it became very clear to us that there was a modification. So one of the things that I teach at a deep level is how to go on and look up public records, right? So on the public records, it didn't take us long to find the borrower, okay? Be able to look up the address, look up the borrower, see all the documentation that was involved in this deal. And it literally takes minutes when you know how to do this. So this is a screenshot of the public records going back to 2005. And I knew right away, well, they got the deed to the property. Great. In 2005, you'll notice all these dates are the same. They got a mortgage on this property. And it looks like they had a second mortgage on this property as well from the original sellers. Okay, so we can tell part of the story just like that in a couple of minutes. And if you've been watching me, listening to me, reading my book on Amazon or anything like that, you know that I always say it's the numbers and the story. If you want to master this business, you have to understand both because if you just have the numbers, you're kind of going in with the blinder on here. If you know the whole story, then you can start to come up with what's the best case scenario, the worst case scenario, but what's the most likely thing to happen? What's the pattern been in this whole transaction? Okay, so we know the starting point on this, and then the next page showed us everything. And this really exposed to what happened here, and it starts on the very bottom there. So we can see in 2008, it went into a foreclosure. This is all part of public records. It went into foreclosure here. And then the loan was sold. And then the loan was sold again. That's what these assignments are. Okay. And then the loan was sold yet again. So the whole time this loan is in a non-performing status, it's just being traded around since 2008 through 2010, 11, 12, that sort of thing. Now, Dwayne and I go back long enough where we know who some of these people are in these companies who are doing it, and we're active in the business. So back in 2008, when the real estate market crashed, non-performing loans went through the roof as far as inventory levels and such, and they were traded around quite a bit. And Dwayne and I knew all the players involved with that. So you can see quite a bit of trading back and forth on this note. Does that mean the note's bad? Does that mean it's unresolvable? And the answer is typically no, because when you have funds like this, and if you go through and look at this very closely, you'll see that all of these are funds. And a lot of these funds would just simply trade notes, and make a little bit of money here and there. Some of them would try to do workouts. If they couldn't get the workout done, they'd go ahead and sell it. And we trained a lot of those people, Dwayne, right?
Absolutely. Absolutely. And like to your point, doesn't mean that this is a bad note. It just there was a problem and people were selling it back and forth, a lot of movement, and you had to dig deep into it and see really at the end of the day what was the discrepancy in the numbers, and that's what we did. We tried to figure out what was going on because as you'll show, it works out to be a halfway decent deal if everything is in line. And like what you said, putting a more definable description about what happened, I think would have been helpful when someone posted this note.
So all these assignments, and then of course, when it gets here, for reasons that we would go down a little bit of a rabbit hole here, but when it gets to this particular company, I know that it's gone. Look, we know it started in foreclosure. It didn't get foreclosed upon. It was the initial stage of a judicial foreclosure. That's what a list pending is. The borrower's trying to stay in their home. They're trying to work out resolutions, but you can see it's hard for a borrower sometimes too to go, well, who am I working with? How do I start paying again? That sort of thing. So finally it got to this company that said, okay, let's work something out here. Let's make this happen. And they did. And it looks like for a couple of years, the note was performing, and then it was sold as a performing note, went from here to here, a couple of quick flips on the note. And then ultimately, as we expected in 2004, there was a modification, and that modification was recorded. Okay, so the initial suspicion on the numbers not making sense are confirmed that this loan was indeed modified. So the modification agreement, because it's a part of public records, is all right here. And what I noticed when I looked at the loan modification, it had also been modified back in 2021. That loan modification was not put as a part of public record. Okay. So we do have the latest. So whatever happened on that older modification, it's irrelevant now. It's what's in this mod. If you're buying this note, this is what you are buying, because the language of this is going to tell you any other dealings with this note, any other numbers, any other agreements are null and void. This is the agreement moving forward. So it's very important that we look at that. Now, this is where discrepancies come in here. This note says it's at 5% interest. The listing says it's at 4.68. This one says the monthly payments are 266.02. The listing said 298.02. This one says the maturity date, which has been extended, is 2059. The listing says it's 2037, should be down here. So that means the number of payments is completely different as well. So what are we buying here? And the answer is we're buying this loan modification. So it's important that we look at this and clarify, because the seller who's trying to fill numbers into a template and follow the instructions kind of tripped over themselves a little bit of what they entered, which is understandable. But
Yeah.
they could have written a little bit more. If I was teaching this person, I would have said, okay, you've got a loan mod here. Let's address that. Let's talk about that. Let's tell everybody exactly what you're looking at, because you don't want this inconsistency of what's happening on the listing here. So just the mere fact of taking 10 extra minutes and going on public records, the whole onion started to unpeel. Now, again, I'm just showing you a part of this because we also looked up taxes. We also looked up a whole bunch of different information here. But I'm just giving you a portion of what we found on this. And that's why you need to be able to put a fine point on these things, because sometimes it's just lost in the translation of exactly what you were buying. And I get it. I have seen people who buy notes, they go it on their own, and they get lucky, quite frankly, and they buy some notes and it's like, hey, this is pretty easy. I can do this on my own. And that's completely plausible. You could do the same thing with somebody getting into rehab properties. Their first couple of rehab properties, that might be easy. It might say, this is a piece of cake.
Mm.
And I'll tell you what happens is that becomes something where you think you got it right away, and your next deal is where you pay the piper. That's when everything comes back and you go, ouch. I didn't understand that part of it. So you do want to have a systematic approach that you can go through on every one of these deals as a system of checks and balances. And if you don't have something like that, that luck will run out if you've just been buying your own and just kind of going through in the listing and says, well, this rate of return looks good. I guess I'll just buy that one. At some point in time, you're going to find out that you didn't quite buy what you thought. It might be in the form of what we saw here with the numbers. It might be in the form that you're missing documentation. So we went through yesterday on another call somebody whose note, now this note's been traded a lot, as you saw. We saw another one the other day that was traded several times, and we had to line up all of the assignments and all of the allonges to make sure they matched. Because it's not a problem now if we buy that note, they continue to pay. But if they don't pay, all of a sudden now we have to foreclose or take some legal action. They go, your attorneys come back and go, we got a problem. And
Yeah,
you don't want to hear that from the
yeah,
attorneys. We
yeah,
got a problem. It's kind of like if you're at the doctor's office, they go, oh, I got to bring in my young assistant here to look at this. You don't want that sort of stuff. So when your attorney's going, hey, we got a problem here, it's going to be because you're missing some documentation. You didn't check all the boxes on everything.
and I don't think it was anything deliberate, as we already alluded to. It's just just didn't put the information in. If I think that it was just confusing. It was confusing to someone that didn't have any experience looking to buy that note, and then would have passed on it, having some education and more know-how and due diligence of what they were looking for. They able to gone back, done what you did yesterday, and being able to recognize, what, this isn't a bad deal after all, just knowing what I'm buying.
Yeah. Yeah. And I think this will end up being a good deal. And but everything I did leads to more questions, which again is a part of my approach in this business. I've always said it's very simple. Break it down, gather information, organize the information, analyze it, make a decision. So my decision after going through that, what did I do in that exercise? We gathered information, we organized it, and then the decision was, this could be a good note, but what do we need? And I have a little list. Okay, we need to see this from them. We need clarification on this. We need clarification on that. Once we get that information, what are we doing? We're going back to that same system. Our decision was we're going to move forward on it. So how do we move forward? We gather more information, we reanalyze it, and then make another decision. And that decision will be to buy the note or to pass on the note or to renegotiate the note. It's very
Mhm.
simple. So you go back and analyze, because these deals, you never get, like it's rare that you get 100% of all the information that you need before you buy. It usually comes in waves, and usually they'll provide information. You look at that and you go, okay, here's what I'm missing. Here's what's wrong, or here's a concern of mine, or here's something they didn't include. And part of it is understanding, by the way, what are the right questions to ask. and get that information. Let's reanalyze it and go from there. That's what keeps you safe. That's what protects you on this, and it keeps you from wasting time.
Yes. Yes. You know, when we were working yesterday with your student, he felt like, oh my goodness, you're going through, and like I said to you, you were going through some of these sites so fast. And John, was it right?
James,
Yes,
James, yeah.
James.
Mhm.
Uh, you know, he was making the same comment, and he was an investor, real estate investor, and he was like, man, this, I thought it was going to be really complicated. And we, you know, you were talking him off the ledge of, hey, you know what, couple times going through it. And at the end of it, he saw, you know what, this, having a system like this really helped him out. And so just following the system.
Yeah, yeah, and that kind of it's just something I've been able to refine over the years, and it just makes sense. Where I can, when you're new, expect it to take you longer. Expect it to take you longer because
Yeah.
you're looking at the unknown. So you have to think through every process. I don't have to think through it anymore a lot of times. And what I mean by that is it's more muscle memory. I just see those numbers. I go, all right, well, there's got to be some kind of a modification. I already know that. Moving on, it would take you a while to come to that conclusion. I already knew it, and then I was just seeking it out, and
Hmm.
then we found it. And because I do this on a daily basis. Um, yes, I know the websites, I know where to go, even though every county is a little bit different on how they store their information and such. After a while, you start to navigate, you know where to look. It just gets easier, but everything does. It's like riding a bike. In the beginning, it's tough, it's new, trying to keep your balance. And once you get it going, it just becomes muscle memory. So have a system in place, but understand there's a reason why we do secondary levels of due diligence. It's always trust but verify. Again, I feel this person was very forthcoming on their numbers. They just should have explained it a little bit better for their behalf. I figured it out, no problem. I have no problem. I think this is going to be a good note for somebody, and I'm sure one of my clients will end up buying this up. All right, well, that's what I got for you today. I got to cut it a little bit short here. I have another appointment that I need to get to today. So thanks for being on, everybody. And again, if you do want to find out more about us and the membership and what we're doing and the success that people are having with this approach and essentially utilizing my system, just contact us. Just reach out. Let's talk and figure out if this is something that's right for you. And I think if you've been watching this, follow along, read my books, or seeing me live, or going to YouTube or Facebook and all the other places where I do tips of the day. If you've been following along, I'm telling you, it's a good time to get involved in the business, and the inventory is plentiful. And I think 2025 is going to be just another banner year in the business. And I think we have, including the portfolio, probably have 5, 6 closings already scheduled before the end of the year
That's
right
awesome.
now.
Yeah.
So it's just been a great year, and we're going to have another one next year. So hopefully you all will join us. So thanks everybody for tuning in, and if you want to see the video replay again, you'll find it on YouTube. If you're just listening to the podcast, you want to, because I'll put this on my podcast as well. But if you want to see the live version, you can go to YouTube. I got a ton of videos on there, the tips of the day, all the other social media. You can find me as well. So thanks everybody, and we'll talk to you again real soon.